Good afternoon and good morning to everybody, and thanks for joining us today. I'm Christy Hughes, and I'm pleased to welcome you today to this media conference about the report Central Bank Digital Currencies, Foundational Principles and Core Features. The report was produced by a group of central banks, namely the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, the Federal Reserve, Sveriges Riksbank, and the Swiss National Bank, and the BIS. With us today are the co-chairs of that group, Benoit Cœuré, head of the BIS Innovation Hub, and John Cunliffe, Deputy Governor of the Bank of England and Chair of the Committee on Payments and Market Infrastructures. They'll give brief introductory remarks before we turn to the question and answer session. Before we begin, I would like to reiterate that comments made at this media conference are on the record, but under strict embargo until Friday, 9th of October at 9 a.m. Basel time. The media conference is being recorded and a video will be published on the BIS website. To ask a question, please use the raise your hand function in WebEx and we will unmute your line, or type your question into the chat as a message to all panelists. If you raise your hand, please remember to lower it after your question. And if you're dialing in over the phone, you can email your question to press@bis.org. So we'll now start with the introductory remarks. John, the floor is yours.
Whatever time it is for you in your part of the world. Money is an essential part of our everyday lives. We use it all the time to pay and to be paid. And for hundreds of years, central banks have been entrusted with the job of making sure that we can rely on the money we use every day, that it will be safe, convenient to use and available to everyone. And technology is now quickly changing the way we live our lives and the way that we transact with each other. And as has happened in the past, technology is changing the forms of money we use in our everyday lives. The current crisis is, if anything, accelerating those changes. So as central banks, we need to think about the opportunities and the challenges these changes mean for us in our job of ensuring that trusted, effective, convenient money continues to be available to everyone. Many central banks are working on these issues, and at the beginning of the year, a group of 7 central banks with the BIS decided to set up a little group to share and develop their analysis of a general purpose central bank digital currency, a digital electronic form of central bank money that could be available to everyone to use every day. In a nutshell, a digital equivalent of cash. Today, this group is publishing a report which explores the opportunities and the challenges of such a digital currency, sets out the key principles that should underpin it and the core features it should have. As well as providing a safe means of payment, a central bank digital currency on these lines could promote more resilient, efficient, inclusive, and innovative payments. But there are also implications that need to be considered carefully, including the implications for financial stability. I should stress that none of us have as yet decided to provide a central bank digital currency, and that remains a sovereign decision for each jurisdiction to take. And of course, we will continue to provide physical cash for as long as people want it. But today's report, and particularly the conclusion that a central bank digital currency along the lines set out in the report could be an important tool for central banks to help them to meet their public policy objectives. That conclusion is an important step forward in our thinking and the basis for our future work. And I now hand over to Benoit. Thank you.
Thank you, John, and good afternoon, everyone. Let me just add to what John said, or two things. The first thing is that, as John just said, none of the participating central banks has actually decided to do a CBDC, and it's for them to decide, together with their governments, parliaments, constituencies, public opinions, and that's not something that can be decided at a global level, nor can it be decided by the BIS. But it is a significant turning point that these 7 central banks have decided to join forces and to reach a common approach to identify the principles, the features, the roadblocks, and to launch a work program, both on the policy dimension and also on the technological dimension. And in a sense, it means that it kind of crystallizes what I see as a consensus in the central banking community, which is that there has been a lot of research about CBDC, there has been a lot of talk about CBDC, but now it's time to go to the practical discussion. And these 7 central banks want to do it together, and that's good news for the global financial system. And the second thing is that the BIS, the Bank for International Settlement, has an inclusive approach to CBDC. So we are happy to support this work by 7 central banks, but we're also working for our broader membership. And in particular, the BIS Innovation Hub, which I'm in charge of, has set CBDC as one of its priorities and will substantially invest on CBDC-related matters for the benefit of the broader BIS community. And I stop here.
Right. Thank you both for the introduction. Now we'll turn to questions. Just to remind you to ask a question, please use the raise your hand function in WebEx or type the question into the chat as a message to all panelists. And if you're dialing in over the phone, you can send us an email at press@bis.org. And while people are getting in the queue, we'll start with some of the questions that have come in already via email. So the first question we've received is from Hugh Jones at Reuters. And his question is there a risk that many central banks will be left playing catch up with China as it forges ahead with CBDCs with its regional pilots? Benoit, would you like to?
Okay, I can start. John, feel free to complement or contradict. No, it's not. We really don't see this conversation as a competition among central banks. China is blazing the trail, and it's among the few central banks which have actually moved to the pilot phase when it comes to CBDC, and that's the so-called DCEP project. That's, as I understand, primarily a domestic project, and other central banks also are entering in this pilot phase. And that initiative exactly makes the point that we need a cooperative approach to CBDC. And I can testify to the fact that China, and PBOC in particular, has been very active in international groups, at the BIS in particular, explaining what DCEP is about, engaging on the technological, on the policy dimensions of their project, and they're fully part of that global conversation. So we really want it to be a collective project. And as I said, at the end, each and every central bank will decide for themselves, because as John very aptly said, that's a sovereign decision to be taken.
Thank you. And now we'll take a question from the phone. That is Martin Sandbu from the FT.
John, you wanted to...
Conditions are different in different jurisdictions. Financial sectors are different in jurisdictions, and social needs are different. China is very well advanced more generally with the digitalization of payments, much more so than many other countries. So it's to my mind, it's not a question of playing catch up. It's a question of jurisdictions deciding where a central bank digital currency is useful, where it meets public policy objectives for that jurisdiction, and then what the key features and principles should be. And this report sets that out for a group of kind of similar economies that think about things in a similar way. But there'll be different approaches in different jurisdictions, that's for sure. Thank you.
Okay, thank you. And now we'll take a question from Martin Sandbu of the FT. Martin, please go ahead.
Thank you. Can you hear me? I'm struggling to unmute myself.
Yes, we can. Thank you.
Thank you. Good morning or good afternoon. Thank you very much for the very interesting report and the introductions. It's really sort of two-part questions to follow up on what's just been said. One is, do either of you personally think that there is a first mover advantage in adopting a CBDC? or is there a sense in the group of the participating central banks that there may be a first mover advantage? And if so, does that cause difficulties? What does that do to the dynamic of adoption and research and so on? And secondly, and related, of course, you have agreed some very broad conclusions, one might almost say inoffensive conclusions, but in terms of the details, there will be different approaches, as John Cunliffe just said. So I'd like to get a sense from you how much stretch there is in the field in terms of the most eager and least eager of the participants when it comes to thinking they may or will adopt one. What's the nature of the landscape? Thank you very much.
Benoit, would you like to start?
Yeah, it's a very good question, Martin. And the way I would say it is there is a first mover advantage, or there is a quick mover advantage, but not that much in the international dimension, because as John just said, different central banks are working under different environments, different financial structures, different political expectations, etc., etc. So it's not a race. It's not an international race, but there is an advantage to move quickly because the private sector is moving quickly. The private sector is ahead of us in many aspects in terms of developing new means of payments, digitalizing payments, and the COVID-19 crisis has accelerated this change. And so we see a new payment ecosystem shaping up with new forms of payments and maybe new forms of currency with different status. And it's very important that central banks can be part of that evolution, of that transformation, so that they can continue to do what citizens expect them to do, which is to deliver monetary stability and financial stability. So central banks want to be ahead of the curve because they want to be able to shape this future ecosystem. And that's in that sense that we see the quick mover advantage.
Thank you. And John, you'd like to come in as well?
So one, just to Martin, just to reiterate, I don't think this is a race between central banks to find one way, and that there will be one way. And actually, you only have to look at the different payment systems we have in our jurisdictions, the different ways we provide cash, to realise that it's not a one answer is going to dominate the whole world, and whoever finds it first will own the answer. What we get from moving quickly together in this group and more collaboratively in the BIS is that you can share thinking, analysis, and I hope in the next stage experimentation, so you get to the key questions more quickly. And also, when one thinks about cross-border usage, it enables you to think about not putting in any unnecessary barriers in your thinking because you're discussing it with others. And I'd say on the stretch point and your stretch question, what's important here, I think, for this group is that we've, if I could put it, turned the question around. We've not said, what can technology offer? What can technology do? What is the private sector doing, etc. We've gone from the other direction and said we have a broad public policy purpose, and how could a CBDC help that purpose? What would it need to have to do something which will be useful for us in delivering a function that we all have and have had for many years? And bringing together the thinking on that, I think you said fairly safe conclusions, I think is a major step forward. Thanks.
Benoit?
Yeah, on Martin's second question, I think another answer, and a very simple answer, is that all central banks are coming from different places, which makes the value of this report, because the fact that they could agree on the approach, that they're willing to join forces and work together, that's all the more important as they are coming from different places. And to be very simple, I mean, there is one very simple difference between these jurisdictions is the use of cash. So it's only natural that in jurisdictions where cash is being less used for transaction purposes. And Sweden is an obvious example. Just to give a very simple example, the Riksbank is more advanced towards investigating and weighing the pros and cons of CBDC. So you have different trends coming from the economy and from different approaches to cash.
Thank you. Now the next question comes from Liwei Wang from Kaishan. Liwei, go ahead, please.
Yeah, can you hear me?
Yes, thank you.
Yeah. So following up, also a two-part question. I think the report mentioned in several places the international dimension of issuing a CBDC, and also touch on the topic of digital dollarization for other countries. So I'm wondering, some countries, including China's active exploration of CBDC, will that be sort of motivated by other country or other reserve currency countries change of stance or more active stance recently? Is there this kind of competition in there, or it's simply what John mentioned, don't put in unnecessary barriers in this process? And I'm also wondering, Benoit mentioned 7 central banks want to do it together. Wondering why, given PBOC's willingness to share, why is it not part of it? And how do you see the current thinking or approach by PBOC on CBDC? Thanks.
Benoit? Oh, John? Oh.
Yeah, I'll sort of follow. And then maybe after me, Benoit. So I think, as Benoit said, is on the China point, I think the pilots which the PBOC is launching are about a domestic CBDC, and the work that we've done is again on domestic CBDC. I think, given that we are all facing similar technological developments and similar challenges, although use of cash is very different in different jurisdictions, there is a chance here to try and build in cooperative thinking in the way we take it forward, and that could be very valuable. But these are projects about how you would provide a domestic CBDC in the first instance, and in a way, what we've agreed as a group of 7 central banks is a use case, and that use case is for a domestic general purpose CBDC. It's one of the things we were able to come together on, is that is something that would help us, or could help us, meet our public policy objectives. On why this group, there's a lot of collaboration going on between different central banks. There's a collective collaboration going on, as Benoit said, within the BIS, and the innovation hub of the BIS will provide more of that, particularly around the technical experimentation, although more for Benoit to talk about than me. But this is a group of central banks. We're used to working together. You know, we face similar environments. We have similar financial sector structures. And a number of us have been working together anyway. So it seemed a sensible group to put together because we had a common platform of like thinking, which enabled us to move relatively quickly. But I'm sure there'll be other groups and collaborations that come together, particularly where people share similar environments. Benoit, I don't know if you wanted to.
Yeah, sure. I mean, let me add, or I mean, maybe on 2 different dimensions, or 2 things. First, as John said, as I said earlier, there is no shortage of international cooperation around CBDC, and at the BIS, I mean, China is an important member of the BIS. China is a member of the CPMI, the committee chaired by John, and we have very good discussions with China on their CBDC project. So there is no shortage of cooperation there. Maybe the second thing is more substantial on the international dimension of CBDC, and that's my personal view. But I don't see any of the existing CBDC projects or advanced CBDC projects being primarily aimed at having an international dimension. Central banks are not doing CBDC to boost the international status of their currencies. That's not how it works. It's primarily a domestic conversation with citizens on the way they pay, on whether they prefer to pay with commercial money or with central bank money, on the architecture of the payment system at a domestic level. That's where it starts from in all countries, including in China. Now, there can be unintended consequences of doing a CBDC. There can be international spillovers, and we have to be mindful of them, and we have to carefully understand which would be these international spillovers, in particular if a major country would launch a CBDC. And that's mentioned in the report, and that's another area for international cooperation. And in that area, I very much believe that the IMF should play an important role, given its broader membership and given its grasp on the macro financial dimensions of CBDC. So that's another discussion, and the IMF will be part of it.
Yeah, sorry, Krista, just want to add one point to that, which is there is a major initiative in the G20 to improve cross-border payments. That's coming to G20 ministers and governors next week. And part of that work plan, it's a work plan that the CPMI, which I chair, is very heavily engaged in, and the BIS is engaged in as well, is exploring how new technologies could help cross-border payments. One of the key building blocks is around how CBDC could help cross-border payments. And I think the IMF is heavily involved in that work, and looking at these questions of international spillovers, I think will be taken forward in that context. But this, we've started from what delivers our public policy objectives to provide sort of safe, convenient money to people, and that's a domestic issue in the first instance.
Thanks. And the next question comes from Douglas Clark-Williams at Payments Compliance. Douglas, your line is open.
Thank you very much. Benoit, you mentioned earlier that central bank development of CBDCs is driven to a certain extent by advances in private sector stablecoins. And a lot of major private sector stablecoins, naming no names, kind of currently under assessment as to whether they should get licenses or not. Is, I suppose, the reverse of your statement also true? Is assessment of those private stablecoins contingent to a greater or lesser extent on decisions being made by central banks on development of public sector stablecoins, CBDCs?
John?
Okay, yeah. Look, I say that, and I can say that as a jurisdiction where at least one major stablecoin proposal is to issue a sterling stablecoin. I think the two things are separate. We have private money and state central bank money coexisting at the moment. And there may be reasons why stablecoins, domestic currency stablecoins, can provide better, can provide more convenience. Those things are possible. However, and this is something which I'll talk now a little bit with the Bank of England at, the Bank of England's Financial Policy Committee has been completely clear on that any new forms of money have to give citizens the same protections and conform to the same standards as existing forms of private money. Now, it's possible that some of those proposals could use a CBDC if it were developed, and it's possible that if a CBDC were developed, the rationale for some of those proposals might, I mean, the different proposers have different reasons and objectives, might change. But I think this is about how we fulfill our job as central banks and our purpose, public purposes. Those of us that have regulatory responsibilities and are looking at stablecoin authorization will just need to make sure that anything that launches in our jurisdiction is as safe as the money we have at the moment and doesn't bring about monetary policy or financial stability implications that we don't want to see. But to my mind, I see the two things as separate. I do think, and this is the last point, and it's a personal view, that if we don't think as central banks about what we can provide to fulfill our purposes, then there is a danger that the private sector will fill that gap in a way that one wouldn't want to see. Stop there.
Yeah, I mean you have two different discussions, conversations. One is about CBDC and one is about the new forms of commercial money. And as John said, they are separate, they are interrelated in many ways, but they are two different discussions. And it would be equally vain, I would say, to see either the CBDC discussion as entirely prompted by cryptocurrencies and stablecoins, and with that the narrative that central banks are catching up and are feeling threatened by cryptocurrencies or stablecoins. That's not the situation. Most cryptocurrencies are niche initiatives, and nearly all of them, or nearly neither of them, has the qualities, the properties that you would expect to become a widely used means of payment in terms of liquidity and stability. And conversely, there is an equally vain way to see the situation, which would be to say that the conversation on cryptocurrencies and stablecoins will be driven by CBDC. So these are two parallel discussions, but these different forms as means of payments, these different instruments will be coexisting in the same ecosystem. So that's really the conversation we should be having. What will be the interplay? And importantly, how can central banks continue to provide what they have been providing for decades, if not centuries, that is stability to the system in terms of providing central bank money to core financial infrastructures, ensuring the finality of settlement, and so on and so forth, and also in terms of providing stability and safety to citizens, which currently is done through cash. So that's the question central banks are asking themselves. How can we be effective in continuing to provide the same services to society in a new ecosystem?
And just to reiterate for anyone who may have joined late, the comments from Benoit and John are on the record, but under embargo until 9 a.m. Central European Summer Time, Friday, tomorrow. And the next question comes from Bjarke Smith-Meyer at Politico. Please go ahead.
Hello. Thanks for this. I just see that there's a trend coming here, and it's sort of maybe not a race for against central banks on CBDC, but a race against the private sector. And in terms of what it is that, or how many private initiatives there are, I mean, I can name one which has been in the headlines for a long time, Libra. But I mean, how many other private sector initiatives are we talking about here, or is that the only one that's really kind of piloting the way forward? And then I'd like to ask, and I don't think this part's in the report, or at least I haven't come to it yet, but is there not a part of marketing that needs to be considered into this? Because if, for example, a mobile phone app can advertise through, let's just say, WhatsApp or Facebook, in this example, a stable coin, how does a central bank, such as the ECB, for example, then sit there and market a digital euro? I'm just wondering whether the lack of public consciousness of a CBDC, whether that is a natural, how do we tackle that? Very finally, and I'm sorry I'm hogging the floor, there has been a big political push, namely from Bruno Le Maire and then 4 other member states, on the sort of political need to crack down on stablecoins. And only on Tuesday did Bruno Le Maire and the Dutch finance minister, Wopke Hoekstra, say that a CBDC would be a natural way to combat a stablecoin such as Libra. I mean, do you feel that there is a political push behind this as well? Thank you.
John, would you like to have a first?
Yeah, so I'll go back to what I said before. It's Benoit's point that these two things, private stablecoin and CBDC, are kind of, they're linked, but they are different discussions. We have regulatory tools which we would use to make sure that any private currency, no matter whether it's kind of commercial backed money, which we deal with at the moment, or something like a stablecoin, is acceptable for general use in the UK in a diverse system. And we have a diverse system at the moment with very different forms of money being used and different payment systems. And we have regulatory tools, I say, to deal with that. That's not the objective, the primary objective here. But clearly developments in the private sector spill across and affect affect our thinking here. But to see this as a competition between stablecoin and central banks, I think, is wrong. And I can certainly envisage a world in which the two exist in the jurisdiction perfectly well. I just want to say, and you haven't had time to look at the report, but when you do, you'll see it sets out the core features we think that any CBDC would need to have. And some of those core features are, about your point, that people need to want to use it. So it not only has to be convertible at par into other forms of money, but it has to be as easy to use as tapping a card or a phone or using cash. And that's one of the core features, I think, that kind of underpin the report. And the report also makes clear that we see a role for the private sector here. Different jurisdictions will put that boundary in different places, but I can certainly envisage a role in which a domestic CBDC can be integrated into apps, can be used widely, and actually I think that would have huge potential for competition and a level playing field for developers of new services if they can all use a CBDC rather than having sort of different private sector stable coins on different platforms. But each jurisdiction will have to decide sort of how much they want this to be integrated and done by the private sector, and where that public-private divide with the CBDC would come. Thanks.
Yeah, I think what John just said is very important, that in any CBDC architecture, and that's being discussed in the report, there is a room, and maybe an important room, and maybe primarily a room, depending on the applications, for private sector solutions. So wallets are a very good example. I don't think that any of the central banks in this group would consider that it is their comparative advantage to produce a wallet. So if and when they do CBDC, that's going to be used in wallets or on smartphones, which will be, of course, made by the private sector. Central banks are not going to build smartphones, right? Just to start from an obvious point. So we're going to look into these complementarities and into what the private sector can do best here, with an objective in mind, which is innovation. We don't want to stifle innovation, and innovation at the front end, at the customer end of the payment universe has been incredible, running very fast over the last few years, and very useful for the consumer. So we don't want to stop that, and that has to come from the private sector, right? Now to the discussion, the political discussion on stable coins. If you take a step back, you can see that in history you always have seen a coexistence between commercial money and central bank money. When you buy a beer in a bar, well, if that's still possible nowadays, but in some places it is, you pay with commercial money. You pay with your credit card, or you pay with your smartphone, unless you pay with coins and banknotes, which is either government money or central bank money. So it's already there. It's just evolving, and we just want to be sure that this evolution leads to a system that is stable and that is conducive to innovation.
Thank you. So we have a question from Justin Pugsley from The Banker. He's interested in the financial stability implications of CBDCs, particularly in the context of flash digital bank runs. Could this mean banks having to only offer term deposits, or having to carry more regulatory capital or liquidity reserves than stipulated under Basel III? And a related question is that there are some CBDC models suggesting that individuals and organisations would bank directly with central banks, potentially hitting a source of profits for banks and undermining business models. How could one mitigate such a risk? John?
John is a regulator, so I leave it to you.
Okay, look, on the first question, it's discussed in the report, and I said at the beginning there are, I think, great opportunities here, but there are challenges as well. So one would need to be sure. And the first foundational principle in this report is that a CBDC, a general purpose CBDC, should do no harm to monetary and financial stability. So the question is not, will this do harm? The question is, how do you design a CBDC that takes away those risks? And the report discusses a number of ways that those risks can be mitigated. It also makes clear a lot more work needs to be done by central banks jointly and individually on those items. And I think that will be some of the areas where the group focuses some of its attention next. Having said that, we have the risk of bank runs at the moment. We have the risk of runs to the central bank through cash. We have ATMs. We also have resolution, supervision, and deposit insurance, which are our ways of dealing with that. So it's not, to me, axiomatic that the moment you have a CBDC, you suddenly open up a huge, sort of enormous new risk. But there are implications there one needs to think about. And on your second point, it's also discussed in the report, will this disintermediate the banking system, and what would the implications be? And again, those are some of the financial stability challenges one needs to look at. But again, it's not, to me, obvious that the introduction of a CBDC necessarily disintermediates the banking system. One can think of ways in which a CBDC might do that, and you can think of ways of trying to reduce those risks. So those are things that will have to be discussed, analysed, and decided by each jurisdiction when they consider should we implement a CBDC or not. But as the report makes clear, it's a question of how you deliver that first principle, do no harm to monetary and financial stability. Not, it's impossible to do so.
Okay, thank you. Now we have some questions from Karen Young from South China Morning Post. China has already been discussed, but she has a question, Benoit, to you. What is the BIS's recommendation on the issue of banning cryptocurrencies or allowing them to coexist with CBDCs, and on CBDCs that are supported by mobile transfers without needing to go through a commercial bank for payment validation? What is the BIS position?
So on the second question, there is no BIS position because there are different ways to do it, and here we're not prescribing the technical architecture on CBDC. So China has a particular way to do it. Other central banks can have different ways to do it. What we want to do in this group, and certainly what the BIS Innovation Hub has started to investigate, is to ways to review the different solutions, to weigh the pros and cons, and to hand it back to the central banking community so that the lessons can be shared. But we're not going to take a particular direction. On the first question, which relates to cryptocurrencies, the BIS certainly shares the objectives of making the system stable and safe. That means first that cryptocurrencies should be adequately regulated in terms of investor protection, consumer protection, and compliance with anti-money laundering and counter financing terrorism requirements. And all these issues are being discussed in relevant standard setting bodies, but also in the FSB, right, the Financial Stability Board. So we would defer to the Financial Stability Board to issue the right recommendations, because that's where the global discussion takes place on the safety and stability of cryptocurrencies. And second, and importantly, the BIS as a joint venture of the central banking community very much believes that central banks have a role to play at the center of the system to provide liquidity and stability to the system. And that's both at the wholesale end of the system, that is to make sure that key payment and settlement systems will continue to be settled and backed by central bank money. And that's also true possibly at the other end of the system, which is the consumer end of the system. And that's exactly what we're discussing in this report.
Thank you. And just a reminder that to ask a question, you can use the raise your hand function in WebEx and we will unmute your line or type your question into the chat as a message to all panellists. And if you're dialing in over the phone, you can email your question to press@bis.org. So the next question is from Les Commons at Market News. Please go ahead, Les.
Hi guys, thank you very much indeed. Trying to compare this to the other side of you, or putting on your other central banking hat, how do you see the more successful the digital currency becomes, how it's going to impact and make transmission? Can you see it impacting on the transmission effects across monetary policy at all? And if so, how do you intend to act and counter it?
John?
So first thing to stress, I think, is that the use case that this group agreed upon was the provision of payments and the provision of a general purpose, everyday electronic form of currency. That's the use case that we talk about as being useful to central banks to achieve their public policy objectives. I mean, clearly there are other use cases that you could have for a digital currency, and there's been a lot of academic literature and investigation of could you use it to change the monetary policy transmission mechanism? What would you need to do that? How might it work? But that really isn't the subject and the objective of this report, and the objective of the central bank digital currency that we're talking about use. I think it's for every jurisdiction to explore by itself how it wants to reflect on those monetary policy opportunities, what they are, whether they exist, how they exist, and those are decisions that we'll take and considerations that central banks will take in their own circumstances. But that really isn't. I think it's easy, if I can put it this way, it's easy to be, in the same way that it's easy to be a little bit dazzled by cryptocurrencies, and stablecoin, whereas actually some of the issues that jurisdictions face with the disappearing access to central bank cash, they faced and are facing before we had cryptocurrencies and stablecoin. They're facing in the existing system. In the same way, it's possible, I think, to be a little bit kind of sidetracked by this issue of monetary policy transmission mechanism. There are, as I say, there is work kind of examining, how would it work and could it be an advantage? And I think people will follow that up. But that wasn't really the purpose of this use case, and it's important to keep those two things separate, I think.
Benoit?
Yeah. I mean, we're not. That's not something we're discussing in the report, and that would be part of a broader discussion on monetary policy strategies and monetary policy instruments, which each and every central bank are having for themselves, and it's ongoing in many jurisdictions anyway. And so that's part of the conversation around monetary policy frameworks generally, and it's not in this report. I just wanted to add that if you want to go there, which we're not doing in the report, then you have to look into possible impacts on monetary policy transmission, but you also have to look into the external channel of monetary policy transmission, that is international spillovers, which we've mentioned already. And that's a global discussion to have, and that's for the G20 and the IMF to have that discussion. And you possibly also have to look into the impact on the transmission of fiscal policy, not only monetary policy. There is a view that CBDC could help governments implement transfers to citizens in a more efficient way, and thereby possibly improving the efficiency of fiscal support, and also possibly helping support financial inclusion and fight inequalities. So it's a much broader discussion, and that obviously goes way beyond the scope of this particular report and would involve a broader range of participants.
Thank you. So if there are no further questions, we'll wrap up the media conference now, and a reminder that the embargo lifts at 9 a.m. Central European Summer Time, Friday, 9th of October, tomorrow. So thank you all for joining us, and we look forward to reading your articles tomorrow. Bye.